So what's it like to sell your business without a broker? Obviously, we prefer if you work with us, but we know not everyone's going to. So here is a general overview of how to sell your business on your own. So the first step is to make sure that you have a realistic idea of what your business is worth. And to figure out that valuation, you're gonna need to calculate your seller's discretionary earnings, or SDE. Basically, the way that I like to calculate that is I start with my bottom line net income on the tax returns, and then I add back things like amortization, depreciation, your salary, any taxes that go with your salary, or health insurance benefits, and interest, and then any personal expenses that flow through. So if you have a personal vehicle that the business pays for, you want to add that back as well, and that will calculate to your SDE. Now there's two of the best places to come up with that calculation. The first one I mentioned was the tax returns. Also, ideally, if your business is growing, you can look at the trailing 12 months. So have your accountant or go into your QuickBooks and pull up the last 12 months of earnings for your business and go back and do that same calculation, starting at the net income, adding back all those other pieces, and then you'll have your trailing 12-month SDE, since your tax returns are only going to show you year end. So especially once you get into a year, if you're past June, you should definitely be using a trailing 12 months. You know, if it's January, February, your prior year number is probably fine. So once you have your SDE, you need to apply a multiple. So basically that's just a number that you multiply times your SDE to come up with your valuation. So I'm gonna give you just a really quick, rough idea of generally where multiples are. There's gonna be a pretty wide range here. Again, this is gonna be pretty general. But so generally, if your business is generating between $0 to $100,000 of SDE, your multiples typically between 1 and 1.5 times. 100 to 200 can get you to about 1.25 to 2 times. 200 to 400 gets to 2 to 2.5. 400 to 800 goes about 2.5 to 3. And if you have over 800, you probably want to reach out. We can give you a valuation since the ranges can get a little wider. So basically, if you're taking home 200,000 of SDE, your business could be worth $400,000. Then once you know what your business is worth, it's time to start collecting all your data. Some key documents you're going to need the prior 3-year tax returns. You're going to need the current year-to-date P&L. You're going to need a balance sheet, a list of all the assets, and you're going to need an organizational chart of your employees and the reporting structure. You're going to use these to put together a marketing deck, sometimes called a CIM, Confidential Information Memorandum, or CBR, Confidential Business Review. Both the same thing. It's basically just a marketing deck for your business. And so you're going to put all of that information that you're going to get from those statements in the deck. So some of the sections that are going to go into your CIM are going to be a company overview, a list of products and services, your organizational structure, but you don't need to include the names, just general titles. You want to show a breakdown of those SDE calculations and the trailing 12 months profit and loss. And you're going to show the balance sheet and a list of assets. Once your CIM's ready, you're going to use that. You're going to create a short post. You're going to put on bizbuysell.com or BizQuest, and you're going to use that to attract buyers. Once a buyer is interested, you're going to have them sign an NDA, and then you're going to give them the CIM or the CBR that you produced, and they're either going to look at that and they're going to decide they want to move forward or not. One thing you want to do is be very protective of your time, so you want to be selective of who you meet with. So at this point, you want to make sure you start pre-screening people that are trying to buy the business before you talk to them. So if someone is interested in talking to you, you should have them submit in writing their resume and their background and why they're a good fit for the business. And they should show a pre-qualification for financing or a proof of funds. Now, one thing to remember on the proof of funds is that to buy a business less than $5 million, you only need 2.5% down. So when you're looking to make sure they have enough cash to buy the business, they don't need to have a lot of cash. Really, a little bit goes a long way. So after that, and you've pre-screened down to 5 well-qualified, both financially and work experience-wise, to buy your business, you're gonna talk to each one. Hopefully, you're gonna end up getting multiple offers. Then you're gonna need to sit down and evaluate the offers. Offers can get quite complex because really there's like an infinite different ways that you could do deals. So just the pure purchase price is not really the biggest factor. There's so many other things that can go into it. There's going to be the seller financing terms. There might be the non-competes. There might be the amount of time that they want you to work for them after the close. So if they want you to work a full year for free, you know, that's very different than if they're going to pay you a salary during that transition period. So you want to sit down, take into account the totality of the offer, and figure out which one's best for you. And then you're going to go and accept the offer. Now you're in contract. You've found someone to buy your business. I'll say this really is more of the beginning rather than the end. The due diligence process can be long. You're going to have to give up a lot of documents and a lot of information. Bank underwriters are going to have a lot of questions. Your legal team, they're going to have a lot of things to work at. So at this point, if you've gotten to where you have a buyer, that's great job, good work, but just remember, you're still a long way from the finish line. So we really just kind of brushed the surface there. You should just know going into it, if you're going to sell your business on your own, it's going to be a meaningful time commitment. It's going to take a significant amount of your time and a significant amount of your energy. But people sell their businesses on their own all the time. You can do it too. But hey, if you decide you don't want to, reach out to us and we can do it for you.